mortgage king.
What's up, guys? Matt Garland here. NMLS number 58700, but I'm better known as MG the Mortgage Guy. I'm sitting here with my team member, Senior Loan Officer Marsha. Marsha, introduce yourself to the people.
Hey guys, I'm Marsha Morency, better known as the Mortgage Queen, mortgage.queen on Instagram, NMLS number 418894.
All right, guys. So look, a lot of you guys have been booking consultations with me and my team. 9 times out of 10, you're going to be speaking to Marsha. So I figured, why not put her on a video? So that way, I introduce her to my audience. So that way you understand, when you click the link in my bio and you book a consultation, you're going to be speaking to the mortgage queen right here. All right? So during these consultations, a lot comes up. But one of the most frequently asked questions are about closing costs. Half of you don't understand what closing costs are. The other half doesn't understand that you have to pay closing costs. And then the other half of you, that's 3 halves, I don't even know how you get 3 halves, but the other half of you don't understand what's involved in closing costs, right? So we wanted to do this video today to kind of break down closing costs, but obviously consult with your lender or book a consultation with us, and we can go into details about your particular situation. This video is just for information purposes only, all right? So when you're talking about closing costs, we always like to use the worst case scenario. We use the 5% rule on my team, all right? 5% is gonna be your worst case scenario, and that's 5% of the sales price, all right? That has nothing to do with your down payment. Let me repeat, nothing to do with your down payment, all right? So the 5% rule is what you have to use. It doesn't mean your closing costs are going to be 5%, but you always want to plan for the worst case scenario. So now let's break down the loan estimate and what some of the fees you can expect. Now again, we're not going to go into dollar amounts of these fees. We're just going to let you know what these charges are and what you can expect to be charged. So number 1 is always the origination cost. The origination cost is what the bank controls. Right? These are the bank fees. So when you guys are out there shopping for mortgages, looking to get pre-approved, one of the things you always ask is, what's your closing costs? The only thing that a bank, what you should be looking at when you're shopping a bank, is their interest rate and what their bank fees are, because everything else is third party. So origination charges that a bank would charge consist of processing fees, underwriting fees, application fees, and if they're going to charge you any discount points for the interest rate, right? Now, I'm not going to get into discount points on this video. I have another video following that's going to really go into detail about the pros and cons of paying points. But that's the only thing that the bank controls. Now, every bank is different. Some banks will charge you just an application fee and no underwriting and processing. Some will charge all 3 or charge some extra fees. I don't know. But again, consult with your lender first. Now, Marsha, what other fees can the everyday home buyer or homeowner who's looking to refi, what else can they expect to pay?
Appraisal fees. Appraisal fees can range anywhere from $500 to $1,000. It could go a little bit higher, especially if you're doing a 203K loan or a construction to perm loan. Those appraisals are slightly higher. Your mortgage insurance premium for FHA, rounding about 1.75, and for VA mortgage funding fee, depending on the your VA status, 2 to 3%.
Yeah, and again, those fees are financed into the loan, but on your settlement statement, you will see them listed as a fee. So it's going to kind of wash itself out, but it's still a fee that is being charged, so it has to be disclosed.
But let them know also that they have the option to actually pay it up front.
There you go. Look, the mortgage queen, right? You can also pay the funding fee for VA or the FHA upfront mortgage insurance fee. Instead of financing it, you can pay it at closing as a part of your closing costs, but it's common for people not to pay it out of pocket and to just to finance it, because again, depending on your loan amount, you know, that 1.75 or 2% could be, shit, if it's a $500,000 loan, it could be 10 grand, right? So instead of you coming out of pocket with 10 grand, you just finance it because it'll probably cost you $10 more.
Yep.
On a monthly basis, all right? So now, here's some other fees. Title fees. This is probably going to be majority of your closing costs, is your title fees. Now, a title report is something that the bank or your attorney or your settlement company has to order to make sure that there's nothing faulty, or nothing, no claims or no illegal permits or COs or any other issues that could come up on title, that is going to be a clean title report. So that's why we need a title report to close. But there's several fees that come along with title, right? And I'm gonna go off my cheat sheet right here. I'm actually looking at a loan estimate right here. All right. So there's a lot of fees that come with title. You got closing protection letters. You know, some title companies will charge you for copy and fax and a phone fee. I see here. You got courier fees. You got lenders title insurance and owners title insurance. Now, title insurance is very important. Title insurance basically protects you and the bank from any past judgments or any past negative items from the previous owners. All right. So if that owner has any past judgments, any liens from creditors, when you purchase that house, they can't come after you or put that lien on your home because that other person, that old homeowner, is not the current owner. So title insurance is very important. All right. You have recording fees. You have, you got searches like bankruptcy searches. We got to look at. We check to see if you had any previous foreclosures. All of these reports cost money, right? And this is all a part of your title report. You have the recording fees where you have to record the deed. That's all a part of your closing costs and your title fees. Marsha, what else do we have as part of that?
Transfer taxes. Be aware when you're purchasing foreclosures, short sales, you have to find out who's responsible for the transfer fees. Majority of the time, the owner is responsible for it, but when you're buying a foreclosure property, of course, you're purchasing it at a discounted price, so there are ups and downs with those properties. One of them, you will be responsible for the transfer taxes. So make sure you talk to your real estate agents, the listing agents, who is responsible for those fees.
Now, you also, with the transfer taxes and recording taxes, depending on where you're located, there are certain times where you'll have certain fees. Like in Long Island, if you buy, I think they call it Potomac tax or Peconic tax, forgive me, it's one of those, right? But you get charged a special fee. If you buy a home over $1 million in New York, you get charged mansion tax, right? So there's all types of taxes depending on where the property is located and depending on the dollar amount, right? So you got to check to make sure with your attorney or your local realtor to make sure that you're accounting for all of that in your closing costs. Now, you also have prepaid items like homeowners insurance, right? Your homeowners insurance, you are responsible to pay 12 months up front. The bank is always going to collect that in the escrow account, but it's due every single year. So the first year you pay out of pocket, and then as you're making your mortgage payment over that first year of ownership, the bank is collecting that money. So now when the payment is due again, they have that money to pay it in full. You also have prepaid interest. Prepaid interest basically is determined on what day of the week you close. So if you close on the 1st of the month and there's 31 days in that month, then you're going to get 30 days of interest. If you close on the 15th and there's 30 days in that month, then we're going to collect 15 days of interest. So that's always a moving target depending on what day of the month. What else do we have, Marsha?
We got the taxes that you're responsible for. If depending on the day of the month you're closing and the taxes are due, please be aware you are responsible for that. So the closing costs may have taxes on there, but when the title bill comes in, if the taxes are due, there might be, depending on Long Island, the hefty taxes that we're paying out there might be a lump sum due at closing.
Absolutely. Now, I want you guys to understand about escrow, property taxes and insurance. If you're doing an FHA loan, it is mandatory that you escrow your property taxes and your homeowner's insurance. If you're doing a conventional loan, if you're putting down at least 20%, then you are not required to pay your property taxes, including in your mortgage. So those fees, that initial escrow setup, which a bank is going to collect anywhere from 4 to 6 months, just depending on what day you close and depending on how the taxes are paid to the county. Some taxes are quarterly, some are semi-annually, right? So depending on how they get paid, then that will determine how much the bank is going to collect. But if you choose to pay your taxes on your own, then you won't see a new escrow account set up as part of your settlement statement. Setting up an escrow account is not a closing cost. It is for the bank to manage your property taxes, because property taxes are first lien on your title, before mortgage. So if your taxes are not being paid, and even if you have a mortgage that's being paid, the town can still foreclose on you. So the bank is always going to want to make sure that your taxes are being paid. But you can elect to pay them on your own. I just wanted to throw that out there.
Let me add to that. If you
Okay.
do elect to pay on your own, just check with your lender because the rates may differ.
Correct. So some lenders will charge you a fee, an escrow waiver fee is what we call it, for you not escrowing, because it's a risk for the bank. They don't know if you're going to be responsible enough to pay it. So they're going to charge you a fee for doing it. So you get kind of penalized. It's not expensive, but you do get penalized a little bit for not escrowing your taxes and insurance. But like I said, on FHA and also VA loans, you must escrow your tax and insurance. There's no ifs, ands, buts about it. All right? So this kind of breaks down, give you a little bit of understanding of the loan estimate and what's incorporated. If you notice, we didn't give you guys dollar amounts because, again, everybody's different. You know, we're a nationwide lender, so every state is different. Every state has different fees, and you know, we didn't want to come out here and start throwing numbers to you guys because, hey, someone in New York may be watching this versus someone maybe in Kentucky watching this. So always use that 5% rule based off the sales price of the home to kind of give you a rough estimate of the closing costs, and make sure you're reviewing your documents. Make sure you look at these loan estimates when you get disclosed by your lender, and if you have any questions about it and you really don't understand it, if you feel like your lender is not breaking this down in a way where you can retain it and understand it, we're here to help.
Call us.
Call us. Well, don't call me. Call Marsha. Right? DM Marsha. My DMs is kind of the matrix. I ain't gonna hold you up. But if you have a question, you know, feel free to reach out. If you do DM, I'm just joking. I will try my best to get to your DM.
Or you'll screenshot and
or
send
I'm gonna
to me.
screenshot it and send it to Marsha, right? But you can reach out to Marsha. That's why I wanted to, you know, get her on this camera, on this video with me, so that way you guys know who she is. You can reach out to her, mortgage.queen on Instagram. And like always, book a consultation. And if you're looking to apply for financing, if you're ready to purchase a home within the next 4 months, hit apply now. You do not need a consultation. Hit apply now, complete the application, and me and my team, we will definitely get back to you to help you get into that home ASAP. All right, you got any parting words for this, Marsha?
Hope you guys understand there's down payment and closing costs you're responsible for.
Say it again for the people in the back,
Down
Marsha.
payment and closing costs you're responsible for.
Yes, it's just not about your down payment. You have closing costs. Now, let me break this down. We're not going to end this yet, right? So let me, now,
Silicon session?
yeah, we got to talk about, because some people may be watching this and say, yo, I don't have the money. I thought I just needed 3.5% or 3% or 5% for my down payment, but I don't have the money for closing costs. So there's ways you can get your closing costs paid. You can get a gift. You can you can get a down payment assistance from a local grant or a lender, where now that money you was going to use for down payment, you can use it for closing costs, right? You can borrow from your 401k or your retirement accounts, right? So contact your 401k provider, whoever's managing that account, and find out what their rules and regulations are. You can get a seller's concession, which is the most popular, where the seller or that builder is going to agree to give you 3% or 6% or 5% or whatever that amount is to use towards your closing costs. So there are ways out there for you to get your closing costs paid if you can't pay it on your own. But I will tell you, the seller is not guaranteed to pay anything for you. So if you're going to buy real estate, if you're going to buy a primary home, an investment property, make sure you have the cash to pay the closing costs. Because I can't tell you how many people go into contract thinking that they're going to get some money from someone or a seller's concession, and they wind up wasting everyone's time, right? Because they don't have the money to close, and now the deal is dead. All right, so make sure you have your money. But those are also options for you. All right. Now, I'm really going to end this video now. Do you have any final parting words? Let them know what your Instagram is, how they can reach you.
Mortgage.queen. Please DM me, click the book in the bio, and we'll contact you as soon as possible.
All right, guys. So we out of here. Until the next video, you're going to see a lot of the Mortgage Queen on my page. Make sure y'all follow her. Reach out to her for questions. MG the Mortgage Guy. I'm out. Peace.
Collaboration is greater than competition. Mad G, making moves, flipping real estate, building wealth, get your minds right and elevate.